In July 2018, Mark Zuckerberg lost $15 billion in one day, as Facebook stock fell from $209 to $174 and the company lost $120 billion overnight. To better understand this figure, I must say that it is more than the value of many large American companies such as Starbucks. Even more than the total GDP of the largest European country, Ukraine. It didn't matter to Mark, though, because he didn't even lose the top 10 richest people in Forbes. But you are not Mark Zuckerberg and you do not have the financial ability to defeat this. You do not have that kind of money at all. In fact, you will not sleep all night even if you lose $1,000. There are 3 types of companies that I recommend you never invest in because you are very likely to lose money. For example, when startups come to the conclusion that it is time to see the results of their work and decide to sell part of their company in public markets. The owner of the company knows that the bigger the prospect of his company, the more demand there will be for his shares, so the more value will be placed on his shares. This is why the stock price of companies goes down 1 or 2 days after the IPO, because the unrealistic outlook disappears and what the company can actually do becomes apparent. Facebook, for example, sold for $38 a share but fell to $20 a share in 2 months. Or what happened recently to Lyft, where its stock sold for $78 but fell to $51 2 months later. That's why Warren Buffett never invests in initial public offerings. So if you do not want to lose Paulton, wait until the bubble disappears, then decide. The stock market is as predictable as it is unpredictable. It's a little confusing, but if you look at this market for a long time, you find that it follows a certain pattern. For example, a significant increase is almost always followed by a sharp fall. It can also happen to the entire market in addition to individual stocks. Because high demand raises prices to the point where the value of the company is overestimated, but sooner or later the bubble bursts and prices return to real value. When PetroChina shares rose dramatically, Warren Buffett immediately sold all his shares and did not wait until he reached his peak. He could have made more profit, but he knew he could fall at any moment, and that is exactly what happened. Remember what happened to Bitcoin, which halved in a matter of weeks after reaching its peak. This is the worst time to invest when prices are rising. And when this happens to the whole market, we face an economic crisis. I'm a fan of Tesla and Elon Musk. I love his idea and the purpose behind it, and his products are great. And I would like to invest in it to be a part of it, but from Tesla's point of view, investing is not a good option, because Musk is a genius to create an advertising space that makes many curious what to do without Tesla. But in practice, everything is delayed, deadlines are postponed, and unexpected problems start, which is perfectly normal. For this reason, when this advertising space disappears, investors lower their expectations and, naturally, prices fall. And if you are one of those people who have invested in advertising, you have probably lost money. So do not let your emotions get in the way of you, because your main goal is to make money and nothing else.